Welcome to the Language of Markets live session. It's Wednesday, Wacky Wednesday for sure. Market is a little bit running back and forth, huh? Not bad. Finally get some movement. As you see, the trading's a little weird just before. Give it some time. It'll work out. Let all the monkeys jump around, see what they're doing, and then we'll see how we can cage them up. Hey, Edward, Nate, Phil. Good morning, Phil. Hey, Phil, just want to let you know we've been thinking about you, okay? Wishing you strength and wishing you well. And so a lot of people here. Phil's mom, he's been disappeared for a while. We missed him. His mom is visiting his mom in hospice or being with his mom in hospice. So we wish you well, Phil. Just want to let you know that. It's felt good. That's what matters, as long as it's felt. So, we are a nice community here, and it is good to know it's felt. All right, how you doing, Adam? Everybody's here? Yeah. Edward, Grace, good morning. All right. Yeah, appreciate the family. Hey, it's good to know. Life gets tough, don't it? For all of us. All right, so let's work. Let's see what we're going to do today. I have a few plans, a few ideas, a few things I want to do to get across the feel of things, which is very important, which is going to be a topic. See what we can learn to keep working on this craft of trading. Have you guys seen the site? We're moving things around, right? We've got a new live page. We've got a new blog page. It's not bad. We're going to be putting some more things on there and futzing with it a little bit more. New color scheme. Yeah, it's we're just moving things around in the meantime. We're still traders, right? That's the thing about us here. Right? We're traders, and so the site's functioning very well, and it's starting to shape up, and we're working actually on another site in the background. But we're traders. Hey, Raj. You can't get the link from the website? Could someone post it for Raj there? Yeah, just go ahead and throw it in there for him. There you go. Thank you, Gary. Oh, you got a picture of that 480 chart, huh? Maybe we'll talk about that a little bit there. Maybe we'll talk about that. And we'll wait for Raj to get in here. I see him there, and I want to talk to him. Hey, Rebecca. All right, we'll give everybody a moment here. We're going to talk about the three types of trades today, but we're going to take it maybe a little bit farther, add a little bit to it. It's good to see you, Rebecca. We're going to add a little bit to it. That's all right, Gary. I wanted to see that chart anyways. No, I think we're going to leave out the tribe, but we're going to add a little bit to it. We're going to actually do the three types of trades. We still have to make some reference charts for our press thing, but remember, we have principles that underlie every method we're using, and the three types of trades that are available is one of the principles. We need continued behavior, change in behavior, process. It's all part of the principles. Okay? And so we need to keep working on that in the background so we can begin to put everything together. Are you in there, Raj? You here now? Okay, maybe you can tell me what happened. Maybe you can email me later, and we'll check on it. And by the way, just a reminder, new month, okay? Somewhere today, the links will change, and you'll get them in the same spot on the website. But it's a new month. Somewhere today, when you'll put up the new link, you don't have to do anything. Just keep hitting the thing. But if you're using one link all month long, it's not going to get you in for Friday because the month's changing. So we do change them. And let me remind everybody, when you come into these meetings, and most everybody does, but I've noticed there's been a few people not throwing their name in there, just coming in as user. Please use your name, all right, in the GoToMeeting. When you log into the GoToMeeting, please use your name so I know who you are here. So everybody pretty much does, but I get a few users once in a while, a few ghosts, so we want to know who you are. All right. Thanks, Aaron. All right, so let's get settled. The market is Fed Day, right? It's Fed Day. We got all kinds of things to do with Fed Day. By the way, does anybody have the Fed Day dates handy? Because I want to do a study. I want to put it and do a study and relate it to gaps, the schedule. No, not historical, just for this year. Just for this year. And then we'll go to historical, Nate. So this is something we've done in the old sessions using major events. And we can use Fed days, which is a major event, or we can even use several historical events. I mean, yesterday's history already, right? So the ones from this year so far, yes, and the ones going forward. And what I want to do is you can get a head start on me. I want to, I don't know, put on a decent-sized time frame and and mark them. Mark those dates as if they were gaps. All right, so we'll do something like that. I know, I could look it up myself. All right, thank you, Edward. Edward put a link up there for it, a schedule for the FOMC. You guys can get a head start on me if you want. So what I'm going to do is, I don't know, we'll put it on a time frame we can see the whole year and just mark out the dates. And, see what we can learn, right? See what we can learn from that. All right, so let's do a little bit of learning here. With the market. So now Fed days happen. All right, cool. Things are going. Things are getting jiggy. It should provide some movement. It's always tough to trade the day of Fed Day, unless you're on some short time frames. Then you can just sort of hop on, But don't get too comfy. Don't get too comfy. And even here, let's just do this live. All right, even here, let's look. We bounced up. Let's just swings. All right. There. We call that the LSB. Why am I going to call that the LSB? Well, that's where it broke off. But a real cheater method is to look where the high came and then broke, right? So we can see. And we're going to make a method out of this eventually. So let's watch. And we'll sort of keep this guy up since it's a flowing. And watch him take the cheap seats out, guys. Watch him, watch him, watch him, watch him, watch him. Watch him. The one ticker's down here. You'll know if it gets exciting. Right? Then you'll know if they're there. See them start to take the cheap seats out. See these people are going up. They're no longer going up. Are they? See them? There they are. Stops hit. See the bar getting bigger? See the bar spreading out? Now what happens after the cheap seats get taken out? Maybe we'll just trade this today. See, this is what happens. You get stopped and it starts to come back up. See that? Whoosh. Oh, this is exciting. And then we can do something like that and make observations. See, that's a lot different than banging back and forth with nothing but pure, emotional reaction. It didn't take long to map this market, did it? Not long at all. So we took the cheap seats out. Now we're wondering. Now let's see if they send us a telegram here. Let's see if they send us a telegram with this thing. And this is where trading can get pretty boring. Okay? You're kind of watching and waiting, even though it's fast. But I want you to see them take the cheap seats out real quick. All right? The one ticker's under here. All right, we'll come back to that. We got stuff to do. All right. What chart are we going to use? I want to use the CAD, but I think I was looking at the oil, which kind of inspired my lesson for the day. And by the way, if you look at my oil map, it's just swings. That's all I'm looking at here. Just swings. All right, so let's do this. So one of the things we talk about is the three types of trades. And that's going to be relative to, okay, it's going to be relative to whatever we choose. It could be relative to a gap. It can be relative to this. I'm going to try and tie this lesson in with all kinds of things. All right, I'm going to try and tie it in with median lines, action-reaction lines, and feel, most importantly. This is what I want us to start to think about here, right? We're going to learn some techniques. We're actually going to learn how to, a very simple way to project where the three types of trades are going to happen. But beyond the technique, I want to develop a feel for what's going on, just like I did with that ES and said, hey, look, there go the cheap seats, right? There's a feel to that, whoosh, and then there's a uh-oh. Right? There's a feel to that. So we need to develop a feel beyond just technique. So I want to try and bring that out today a little bit. Where were we? All right, so three types of trades. We have the push. We have the type 2. And we have the type 3. Now the push has a certain feel to it. The type 2 has a certain feel to it. The type 3 has a certain feel to it, a supply-demand, rhythm feel to it. And just as a quick reminder, the three types of trades, we always want to know what we're talking relative to. So if we're looking at a gap, we're going to look at the three types of trades relative to a gap. If we're talking swings, we're going to look at the three types of trades relative to swings. You can draw one single line. You can draw one single trend line and look at the three types of trades relative to one single trend line. So it's always relative to something. Today we're going to make it relative to swings. All right, we're going to make it relative to swings, and particularly same size swings. And we're going to see if we can get another feel for this whole thing here. And this is going to help us when it comes time to trading. It's going to help us see the market quite simply and make decisions. All right, so let's, you come to this market this morning, all right? You'll see where we're going with all this. You come to this market this morning. It's time to map. It's been a pretty good practice. We've been doing this just about every session, and everybody's catching on to it. We're going to look at the major swings. We're going to look at the minor swings. Right? Major is the biggest swing on the board. Minor is the next biggest swing on the board. And just by doing this much, we are starting to organize the market in a way we can see it very easily, and that's the most important thing. Because it will work itself into certain patterns. And when I talk rhythm, right, there's a different rhythm, there's a different heartbeat to a major swing and a minor swing. So if we're looking at a major swing, it's got a different heartbeat to it. It's got a slower heartbeat. We're looking at a minor swing, it's got a quicker heartbeat, a quicker frequency to it. And there's a more of an urgency in this, and there's more of a loping in this. And then there's a whole reversal we need to take into consideration. So I'm working through the feel of it. The feel is so very important. All right, the feel is so very important. The feel of a market, which way it's going, what it's doing, the pressing. The feel is a very important thing in a market, not just a setup. See, I can do a setup, right? I can say, look, this is a bar level press, right? And that's going to describe something. See, the structures I've created or I've made distinct are actually describing a feeling. And so once we learn how to do this, we want to get into the feeling of it. It's like the feeling when you're riding a bike. It's not esoteric. But I have to create some things for us to recognize that go over and over that are describing a feeling, right? There's a feeling in this, right? What's the feeling? The feeling is price has been kind of squashing down, and now they're just standing there on the bid, and they're organizing themselves, and they can't take it, and pow, right? There's a feeling behind that little piece of structure there. Now, doing it by the numbers wise is going to be something like this, right? We'll take that swing, and we'll go like this, and we'll think about getting long there, right? That's by the numbers. And it's a really good start for us to be doing that. It turns us around a little bit. But I don't want to lose the feeling of that. And if you're not sure what the feeling is of that, get yourself short, okay? And you're begging for mercy here as each bar is grinding up, and you're watching each tick, and you're short. And right here, you just know, you're about to get clobbered. You guys know what I'm talking about? If you're short here, and it's not a horrible idea to be short here, okay? So let's say you did something like this, right? You did something like this, and you got short. And now, don't you, Grace? Right here, you're about to get whacked. Right? There's a feeling, there's an experience behind it. All right? You know it, and it's screaming at you. Now, it's good. You've got a plan. Stick to your plan. All that good stuff, right? You got to stop. That's what stops are for. That's not what I'm saying here. What I'm saying is there's a feeling. Recognize that. Make it conscious. Because even though you're about to get whacked, maybe later on you can recognize that and say, yeah, I need to get long this thing now. And these are my guys I can put a stop behind. And, maybe it doesn't pull back all the way for you, whatever. I still want you to get the feeling of a press, the feeling of a structure. I can give you the instructions for a structure, but there's a feeling behind it. There's an experience behind it. Otherwise, we're just doing a dead system. All right, so every one of the structures I'm using, especially when it comes to different types of setups, have to do with feeling and traders really getting jacked around and taking advantage of that. And so they're not just, oh, this pattern kind of looks good. That's a start. Oh, I've seen this before. That's a start. But there's still a feeling behind it, okay? Now, Let's keep working on this. Okay, so here we are. Major, it's got a certain feeling, right? It's got a certain, it's loping. Minors, it's got a certain feeling. All I can do is describe it how I experience it, but you got to look into your own. You can feel it, though. There's a certain pushing. And like I said, get yourself long or short these guys, and you'll get that feeling, that certain urgency. And that certain urgency is what the push trade's about. Right? That's what's underlying the push trade. That just put orders right here. And we'll see it happens in, sometimes it happens down here in the bottom of the major, sometimes it happens up here. It happens in different places. All right. So if we were to draw this guy out as a model, just kind of imagine what it would look like. Something like this. This will be our major. And then we get up here above the high, and we start making minors. Like so. So this is where we're at right now, right? Like this, pretty much. So I'm just going to draw a line here, even though this one isn't on the same exact line, but that's not the swing. This is why I'm making it relative to same size swings. This one didn't even pull back into the first major. What, this one, Nate? Didn't pull back into the first major? I might have lost you. Not yet? Okay. It might. Okay. So if we look at this now, and let's put a few. Oh, your model has the minor pulling back below the high of the major. No, it doesn't. Does it? Ha. Here we go. I know, it's close, right? But saved by a tick. Thank you, Nate. Keep me honest. Saved by a tick, and we're going to talk about that. Saved by a tick. All right. So if we want to do a push trade, all right? So now let's come up, since we're using the three types, we're going to learn about the three types, and we're going to learn actually how to project the three types. If we want to do a push trade, what are we going to use to project this push trade? Right? We're not going to use an ML. We're not into MLs yet. But if I'm just using swings, okay, I want to do a push trade. I want to do a push trade. Oops, that's all right. What can I use to do a type 1 push trade? Same, which, yeah, but we have to be specific, right? Same swing length of push trade. So we're going to do the three types relative swing, is lack for a better word here. the three types of trades relative to same size swings. And we had the relative talk. All right. Hey, Nate, modified shift high is also the same swing length as the swings we are projecting. Yeah, that'll work too, but let's go really simple here. So let's do this type 1 push trade using minor reaction leg, okay? And this is how we're going to project a push trade. Here and here. Okay, so I'm projecting my push trade now. Right? And there's a feel here. Roger, Roger. There's a feel here, right? Get the feel. It's just like this feel. There's an urgency. There's a quick breathing rhythm. Right? There's a feel. There's also a it's been going up without me kind of a thing. And these aren't big pullbacks, right? These are pretty active, just a few bars. Just a few bars, right? These are pretty, it's not a complex pullback where we're doing all kinds of weird stuff. These are pretty simple. Hit the thing and run, right? Notice, you hit the length and run, right? You hit the length and run. This one hits the length and right? They're smaller. There's pushing. They're pushing this thing. Okay, so that's a type 1. Now, how could we project for type 2? Type 2 expand. We're not using median line. I'm not allowing you median lines. I'm just allowing you guys swings. We can double the swing length, true. What's even easier than that, though? I'm trying to go real easy so we have something to practice with. We can project the blue, right? We can do an expand and continue and project the major reaction leg. Make sense? So here we run one more time. Okay. And again, you can keep doing the pushing trade. That's why it's called a pushing. There's a pushing. You can keep pushing it. And so we can consider a type 2 using the major reaction leg to project where a type 2 is going to happen. Now, get the feeling of a type 2 also, because there's certain things in here. So there's a pushing, right? There's an urgency. See, I'm not even looking at this because it doesn't count, this one. See, there's an urgency. Boom, boom, boom. This right here has the same essence as this urgency. It's just spread out in time a little bigger. All right? This is this. It's same. Everybody get that? It's same. It's got the same experience, the same essence. Same thing. All right? It's that same grinding. The only thing that hasn't happened here is this part. That's the only thing that hasn't happened here. All right, so type 2, so get a feel. There's this pushing. There's this pushing. And we want to pay attention to the price action also. Right? There's this pushing. There's this pushing. It's just like here. It's this pushing. You might be happy as a clam. All right? You've been going boom, boom, making new highs, boom, making, if you want to just do these by themselves, you draw a median line for each one. All right? Price hits the median line. Price hits the median line. See, that's what this median line does. It was very specific. But now get a feel for this. All right? Without predicting what's going to happen. We want to get a feel for this. All right? We see the characters a little bit different, right? It's not hard to know where stops are. The same way we just kind of looked at it in the ES, right? Where are the cheap seats? They're right here. See them? See the bar? See the outside bar blast through hitting stops? Okay, now keep our minds off predicting for a moment. We'll go there in a minute. We'll go there in a minute. Before I started measuring swings, one of the things I would do with the cheap seats is wait for this press through them and just have orders waiting underneath somewhere. Just have orders waiting. And it was a pretty good entry technique, to tell you the truth, because it just freaks all these people out. Just freaks them all out. So we see some pushing that's working. Now let's watch the price action here. And so what's happening, all right, what's happening is you're busting this. And so for a projection, a very easy projection to make, and you guys are right, we can double out the minors. But something even easier is to go the length of that major. And this one went a little bit farther, but it's close, right? It's close. So that's your quick, easy projection. What this is price expanding. So that's a type 2. All right. Now, anybody have any idea how to pull off a type 3 with swings? You're pretty quick, Raj. So yeah, we can pull off a type 3 with an LSB. So we can come over here and pull off a type 3. So if there's going to be an expansion, there's going to be an LSB swing, right? And so what we want to do is we want to get a very good start to understanding this thing. All right, so there's where your type 3 is going to be. So this is going to be a type 2, the length of that guy. And a type 3 is going to be where? Somewhere near the length of this guy. And you want to see this dynamic of taking out the cheap seats over and over and over. And watch, you can feel them. All right, here, get a feel for this. All right, you can feel them. Stops hit, outside bars, zoom. We come back up, we test. There's a lot of confusion going. It's a good area, right? There's a lot of confusion. This thing comes back down. See it zoom right back through. And so type 2s can be here, or secondary type 2s can be somewhere over here. All right, somewhere in this neighborhood. Okay? And type 3s are going to be somewhere in that neighborhood. Hey, Edward. Phil says type 3, not type 2. Where? Oh, thank you. Type 3. There we go. Shane, would you mark the type 3 as type 3 and not type... No, yeah. Sure, just for you. Just for you. Since it is instructional, I might as well get the instructions right, huh? All right. So now you have an idea where you can pull off each one of these trades live in real time. And I'm also trying to get the feel of what's going on. There's pushing. The pushing gives up. So many times the pushing gives up, we just want to keep pushing it down here, and we end up screwed, right? This might be a nice reversal. But, if you hit it here, you better have the Momo on the side. You better have the pushing feeling. You better have this part. All right? You better have that part. And so there is an appropriate time to do each one of these trades. We're not going to find a rule. We can find some guidelines for each one of these trades, but we're not going to be able to find a rule that always works. The rule that always works is learn to develop your feel for the market, and it will come right to you. Learn to make these distinctions, and then as you study, you can study what happens. You can get a feel. You can get a feel if you were long here and what happened. You can get a feel if you tried to short here and what happened. And this all helps us get in the proper rhythm of price rather than being jacked around by our reactions. A lot of the battle is just to quit getting jacked around by our reactions, really. And so you can see this guy ends up being a very nice type 3. And we kind of talked about this the other day, this LSB coming through, and then where would an immediate target be? Something like that. Because you see it starts to, it all starts to go together, right? You see how it all starts to line up together. It's a switch. But just as a very simple method, we want to get that. And I want to get across, where does the first pullback fit in like we were looking at on Netflix? Would it be a type 3? I'll save that and I'll go back to that and we'll look, Nate. Let me keep working here. We'll go look at that Netflix in this context. But we can practice seeing this anywhere. Now, sometimes it's absolutely appropriate to be hitting this type 2, and we have about where. A lot of times when I hit it type 2, I want it to be around the same length as that major. I want it to be around the same length as that major. Push trades are going to be this length. Now, we can also notice something else about type 2s. So I'll just take a quick picture of this. So we can notice something else about type 2s, okay? Let's look at this. This is going to relate to something we looked at earlier in the week or last week with the gold chart, right? What's the price action doing for a type 2 here? Do you see the price action is doing one of these numbers? See it? Look at the, do you see the, everybody just happy. Then you see, you see the, this is very emotional. So you see the price action here, right? So you see that thing expanding, but you see what the price action looks like. This is beautiful because it just, the people who can't take it in, they're just diving in short. Let me get on my piece here. And their divergence indicators are now starting to diverge. And their moving averages are just now rolling over. Here's your moving averages. Just, oh, I got a red arrow says sell. Stupid trading. Let's get right in touch with price here. Right in touch with price. And when you do this, there's lots of ways you can see this, and you can see the push trade, there's no messing around, all right? The market often has a lot of messing around, and this taking out this little swing by a little bit or whatever is gold. Look at him do it here. Look at him do it here. See, here's where it's happening in a major leg. We don't know it's a major leg yet, but look at where it's happening. Look at the, and then look at the diving down. Do you see how this, people are thinking about longs, but do you see how this just takes it out by a tick? We want to recognize this kind of price action because it happens both up and both down. Okay? And we throw it in the right context, and it's gorgeous. So before we get this, taking those guys out into the bar level press. True, yes, but I want you to see that in the right context, it makes for a beautiful type 2. All right, let's keep getting the feel of push versus we're going to start here. So let's just keep getting the feel of push versus type 2. All right, I want to get the feel. Let me find something here. So something coming off the bottom. Let's use an example we used on Monday. You ready? Let's see if we can apply our little model here. We used a gap swap on Monday. You guys remember? We taught a little gap. See, do you see the price doing its thing here, right? You see the up and the boom. Okay, good. You see that. So, no predicting. Let's just get a feel for this. We have a major swing, okay? This is what we went over the other day. So let me set us up. Right? We already talked about this a little bit. We have a major swing. We're over here. We don't know if it's going to make a higher low or not. Now, price is coming off hard. This is a subset of that pattern right here, actually. Where they take them up, take them down hard. It really freaks everybody out. See? Take them up, take them down hard. This freaks everybody out to no end. Now, There goes price. It's in a hurry, right? See, right here, we don't know. It's still going down. Now, forget bar level presses and all that, swing level presses. Just follow me here. Look at that bar, right? Do you see it turning things around? Look at it just now. We have a new high. Forget all that. Do you feel the urgency in price here? Does everybody feel the urgency? We were going down, and there's this new urgency. We can see it through this gap. All right. As I watch, if I really want to push this market, right, I'm going to use something small. Like that. And this is the biggest bar on the board, right? So you do get the urgency that the shorts are now having to cover. The longs are wanting to get in. There's this urgency up. If I want to push this market, okay, I'm going to push it with that swing. It's a little itty bitty swing. That's me wanting to get on board the bandwagon, right? I'm afraid it's going without me. I'm not saying this is a good thing. I'm not saying it's a bad thing, all right? I'm saying that's the experience. Sometimes jumping on the bandwagon here is the most appropriate thing to do, right? There's a feel in this thing. Right now we're just trying to separate out the feels so then later we can decide what's appropriate. This is like the missing link in trading, the feel. Right? It hits. You guys get it? If you want to push it, what are you going to use? This guy that's going to push this thing. If you're pushing it, has anybody ever really wanted to hop on a market and pushed it here or even jumped in here? Where are you putting your stops? Right here, because you're way up in the thing, right? You're putting your stops right here. You know, it's pushing, so you're going to use a cheap stop. You're putting your stops. So we know where the stops are going to be. These people, there's an urgency to it. Again, I'm not predicting. I'm just watching. If I want to push, I'm pushing that guy. Right? If I wanted to push, I'm pushing this. If I'm wanting to push, I'm pushing this. A little bit bigger. See, if I got my stops under here, I'm still good. All right. Now what's happening, right? Look at the bars now. Look at the bars. We can see them getting bigger. Get the feel of it, right? Look at the tails now, right? Why are we doing that? Because we just took out these cheap seats. These are where the stops are hitting. So the pushers just got whacked. Whoa. Thanks, Nate. That sounds funny coming from you for some reason. Scooby-Doo. Anybody remember Scooby-Doo? Right? You're all old. You know Scooby-Doo. Oh, you guys are too much. All right. So then with the cheap seats. If I want to project something bigger, right, I'm going to look at something like this. All right. So you guys get me on the feel here? You guys get me? And look what happens, right? See the straight down we come? And just turn all of those jokers around. Just turn them around. And a type 3 would be like this, in here. So we'd have a type 1. We'd actually make a little bit of money on our type 1s. We'd have a type 2, and then we'd have a type 3 here. It's beautiful, right, Phil? It's a beautiful way to see. And from this, you guys can go practice. And as you practice, then you can see it happening in real time, like I was watching the CL today, and begin to make decisions. And then you can begin, and you know what? I think we're just going to do it here. You know, we're going to take these things. This is going to be part of the library. I'm going to write it down right now. And I got to come up with a good place for us to organize all this stuff. And I'm working on it. And we can study type 1s in different situations. We can study type 2s in different situations. We can study type 3s in different situations. What's the situation of this particular type 2? Coming off of a major bottom. See it? Oh, Phil's got another one for us. We'll have to pull some of these up here. NOVN. All right, we'll come over to that. Yeah, right, Roz? Price is coming off of a bottom through a V, right? It's coming off of one of these little patterns here. See it? That little pattern all by itself. This little pattern, watch. This got to go to the library. We got to dice this out. It's a big, huge, messy, overwhelming thing right now. But this little pattern right here, where we have this strong up and strong down, can happen at the bottom. It can happen at the top. Okay, like that. That little pattern right there. And here's what it would look like at the bottom. So it can happen at the bottom, can happen at the top, can happen in different situations, can happen part of a minor, part of a major. But you see how it's that final oomph? It's the stuff a press is made of, that final, and look at the bars, right? Look at the bars. Look at the bars here. Look at the bars here. Look at them come down with deliberate force. Deliberate force. Deliberate force. And in this particular case, it's part of this. Now, sometimes these minors are going to run. Sometimes it's just going to take out the cheap seats. And you see them, and it confuses people. We need to start to think about when and where. An interesting experiment would be to find situations like this and try all types of trades as price unfolds. So if type 1 doesn't work, try type 2. If type 2 gets busted, try type 3. Yeah, Nate, that's actually one of my future practices for you guys. But you can do it on your own. It's a very good learning thing. What Nate is expressing is to do your own play experiment. Try type 1s. And if the type 1 gets busted, immediately go into type 2. Right? If that gets busted, try type 3. And you run into a few hiccups. And so I'm still organizing the exercise, Nate, but I like where you're going with that. Thank you. You can begin that practice on your own, right? Do it with sim trading or little money or just practicing. But you'll start to learn a few things. There's a few hiccups, like when type 2 just keeps going, right? But you learn a lot. You learn a lot. See, this is a particular situation, and this is actually one of our frameworks we'll use, where a minor busts into a gap on the left, like that. So this is a particular framework we'll be studying eventually. That's going to look like this, where you look for the outer parallel. It's actually a pretty good one right now, where you look for the outer parallel into the gap on the left. But sometimes, right, Grace, you could just push. I know Grace's been pushing these markets up and down, right? You've been very pushy. And you've been nailing it. You've been nailing it. It's been appropriate. It's been appropriate. I know you've been pushing the Russell and the ES up, right? You have, and you've been nailing it. And so you had a good feel. You had a good sense for that. You ought to see some of those. They're beautiful. But it's not the only thing price can do. The price is in a certain mood, and you feel that mood. Right now it's in a mood. It's jumping around, especially with Fed things going on. But it can do this mood. All right, so we sense its moods, just like we sense our spouse's moods and learn to duck. But when you learn this, I started by doing the pushing exercise. Yeah, there's nothing wrong with pushing. Really, there's nothing wrong with pushing. It does have its appropriate place, and Nate's giving an interesting exercise to go and start to learn some of that. But there's a feel. So that was price related to those swings. Now let's do something else we were looking at live. All right? You remember we did this euro pound. You know, we made sort of a zone out of it. Pushing, 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 pushing. So I was doing a little slide for multi-pivot lines. That's a multi-pivot line, okay? A multi-pivot line is also showing us pushing, pushing. And you can see they're about the same size swings in here. Although this one kind of tricked us a little bit, went a little bit deeper. But, you know, they're about the same size swings in here. And they're pushing, 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 pushing. And so that's a multi-pivot line. So a multi-pivot line is representing a certain kind of pushing. Does everybody get that part? So now I'm going to take this lesson a little bit farther. And today we're just trying to get some instructions and get an understanding. And I'm pushing the feeling thing. And so this is a pushing. And it's been pushing. Now, watch here. How price lifted and then started to come down and crack, right? So now this sets us up for type 2. Anybody remember the instructions how to look for a type 2? So these are quick and dirty instructions, right? We're doing the quick and dirty today. But it gives us something solid we can practice with and then expand ourselves a little bit. We want to expand our skills, our abilities, our capacity. So if type 1s, we use a major swing. All right, Phil, good. Let's go look. I got a major swing over here, right? And there's your type 2. So type 1s. And notice something that happens real quickly. Sometimes you get that little short con effect, right? Type 1s, boom. Now, if I wanted a type 3, now notice it doesn't fall exactly on the line, all right? These things aren't perfect. But if I wanted a type 3, it would be right in this area. And notice where the type 3, notice it doesn't even give you a bar anything in here. It just zooms that area. So if I took a type 3 trade here, I'd probably be doing a target of down here, like that. And so this would be my type 3 using the LSB. So look at them, right? You look at them, you can see where they take the cheap seats out. And we know, all you have to do is look at a chart and you can see the cheap seats. Now, I'm not saying to buy every break, all right? I'm saying, what's the situation here? What is it? Look at it. This market is just flying, right? It's rolling up too, and it's rolling up like with a mission. And so in a market rolling up with a mission, I got to tell you, most people are wanting to fight it and do a reversal immediately. I mean, it can't be that high. It's not right. It's stupid looking. And so type 2s are something I'm going to actually project for and look for. And this is also where a multi-pivot line can turn into an action-reaction set. So I take the multi-pivot line as a center, I go action, and I can start to look. So I have an action-reaction set, and I have a major swing here. And this gets everybody discombobbled. And so this is where I begin to look for some price action to say, maybe I got a type 2 in here. And I either get it or I don't get it. See, that's beautiful price action here, right? See this bar? This bar is making a statement. Throw this bar on top of it, it's making a statement. Now, this is where I want to do a try trade. See the difference? See how I'm using my try trade in a very specific way here? This is where I want to pull off a try trade. And I either get it or I don't get it. But this is where I want to pull off a try trade. This is where I want to take this swing like this and hit the try. And so this would be the type 3, no go. It actually zooms that area. Could these lines be drawn a little more perfectly? Sure, but that's the thing with center lines, right? I'm showing you the difference here between a center line and action-reaction lines. Action-reaction lines, you are hand drawing a center. A median line set, the difference between median line sets and action-react. A median line set is fixing the center. And look at it on a median line set. Push, 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 try. Type 2, type 3. And so now we're into the lines a little bit. Anybody knows what this might look like on a daily, weekly chart? I can see it already. Learn to see these things. A press and a what, Raj? Learn to soak this stuff up. It takes practice. It'll be some kind of a press, right? It'll be some kind of a press. Now you're falling into my next thing, Nate. If you go into a type 2, by the way, what bar level are we representing? What bar? If we ever go out of a push into a type 2, we're falling into an outside bar. Thank you, Nate. Right? See it? When you start to go into a type 2, you're in the outside bar family. Buying or selling the tail of an outside bar. Yeah, and that leads to more stuff. I'm already going too fast today. But let's look at this, what this would look like. Okay, this represents this. This swing is going to look like what I call, feel it, I call it a bait. Meaning they dive down hard. Look at that, right? They dive down hard. And boom. And so this is inside of this on a bar level. I call it a bait. It's a bait. It's like this little guy here, right? Push, 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 push. And then crack. See how ugly that feels? And then whoosh. Holy crap, look at that. Right? This baited you. Unless, of course, you were using swings. Then you didn't get baited too bad. But you see, and then it turns around and does this and makes a new high and says, you know what? Buy that now. Right? Then new highs. Don't hold it forever, but then new highs. Okay? Swing, 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 swing until the swing is over. Swing, 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 swing until the swing expands. Okay, so this is going to look like a bait. And there's a feel behind a bait. It makes that quick dive down or dive up, either way. Let's put this on weekly. You see the bait? And we're on a weekly chart. Press, 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 press. I know it's a tail, but at one point this bar is down here. This one bar has just engulfed 1, 2, 3, 4 bars, okay? Or at least 3 bars. It's engulfed them. Whoosh! That's what a bait feels like. You just got tricked. How do you get tricked? This is how you get tricked. You watch. I know you guys have done this. Ooh, I got support. I don't have a swing, but I got support. All right? Or I got resistance. I don't have a swing, but I got resistance. And then you might be on the ES tick chart, and price goes like this. I got to get in. You just got elicited. You got baited. Very cool. And then later on, this turns into a 3-gap attack. Okay? But later. We're going too fast. Anyways, we're working on feel today. All right? We're working on feel. We're working on feel. We're going to go take a quick look at Netflix. Let me show you another one I spotted. All right? ES took out the low. All right, where's the ES at now? Not before it made out a high, though, right? Did we do it? No, didn't quite make it. But we did make a high out of that puppy. All right, so now, look, the swings are all different sizes. So now what am I going to do? I'm going to let it organize itself. That tail's interesting. This pattern's interesting. We're just talking about it. All right, so let's let price organize itself. All right. Let's let it organize itself. So apparently this didn't take out the cheap seats enough. They had to give it an extra blast. But I want you to get the feel of that. All right, I want you to get the feel of, popping something and running, popping and running, popping and running, and the cheap seats, and when it's appropriate and when it's not appropriate. I'm going to show you where I did this type 1, type 2, type 3 in the CAD. A little bit of a different market, right? But let's take the same idea. Actually, I'll let you do this one, and we'll do it on Friday. So the idea was we have some sort of a major swing. We have some minors. The minors push into a major. Okay? So we'll just take a picture of that. I'm going to start with, this frame. And then I'll do that on Friday. But I want to make some time to go over Nate and Phil's stocks and questions. All right, Netflix. All right, what was that you asked, Nate? Something about a first pullback, right? So we're looking at type 1s, type 2s, type 3s. So let's see if you can hit me with your question again, Nate. We have an LSB, right? You don't remember? I'll go back and look. Hang on. See, I know. I do the same thing. I don't remember. I'm looking. I don't know. I lost it. Sorry. Something about first pullbacks, right? Well, where does the first pullback fit in like we were looking at on Netflix? Would it be a type 3? All right, let me see if I can figure out what you're talking about. All right, so let's remember our model. We were using a major. We were using minors. And I was using minors to demonstrate a push. And I was saying minors are going to push. Use a minor swing to do a push trade. Now I was saying use a major leg to do a type 2 or to think about a type 2. Okay? So we have our push, type 2, and then we can use an LSB for type 3. So that would be like the first pullback of a type 3. So if we look in here, I have, this is actually my major. So I can't really put that whole thing in this framework, I don't think, because I don't have a major back here to really go by. So this is really my major, and there are no minors to use. So I can't really do that. I'm glad it was something I forgot. You guys follow me? So if I'm looking at this, this is my major. And by the way, this framework we're looking at is an ABC gap framework, right? Gap, ABC into the gap possibility. So I can't really frame that up here. So it's a little bit of a different animal than doing type 1, type 2, type 3 relative to same size swings. Let's turn it around maybe. Let's see what we can see here. Let's turn it around and just say push. If I just use this as my major, all right? Again, I got no minors to work with in here. So this is using minors and majors. So what will have to happen is this chart will have to unfold doing some other swings here. I'll keep thinking about it, but right now, this is my major swing. And it got busted. And I got no way to do a type 1 type. I would need minors to do this. So this is my major. It would have had to bust something into the major here to land, to work that model. So price is not unfolded enough to do this, as far as I can tell. So right now, all we have is a major got busted and a major turn. So let's look at it this way. See, this is different size. In this instructional thing, we're using same size. See, this is different size. I think that's where we're getting hiccuped. All right, different animal. You guys follow me? We're using same size to teach you to practice with. This one's bigger. It's different size. It's got the same stuff, right? It's helpful to see different contexts, right? It's helpful to work through it, right, Raj? Okay, so in this example, I'll be using the swing and the tri-leg, right? And trying to push this tri-leg right here, right? So it bounces off of it, and I'm trying to push it. It's not the same size as anything else. It's just the swing and a deeper tri-leg. So it's a different sort of thing here. We're isolating it. But I can still say this is a type 1. This is a type 2. This is a type 3. And so in this case, in the type 3, I'm going to use the LSB swing. That's going to remain the same. As for the type 2, there's no way to project it with swings. The only way we could project it would be with that leg. Okay? So that would be the projection for type 2. It'd be a set of action-reaction lines. And it would come out something like that. So this would be, remember I started this conversation, it's 3 types of trades relative to. And so in the instructions I gave them relative to same size swings. So this does not fit that yet. Doesn't mean 3 types of trades can't be relative to the try here. Different animal. But it's something for us to look at. It's something for us to look at. So I really have no major, minor swings to work with that yet. It will probably unfold into it. So right now, this is our model, right? We're just looking at this, and we're saying, boom, and we're noticing this gap. And we are definitely seeing some cheap seats taken out, okay? So we'll just keep following that one, see what it unfolds. And we have a new one, NOVN. Where do you get these guys, Phil? NOVN. We're going to have to start a stock scanning room or something, because I love to trade stocks. Ooh, what's our spot doing? Yeah. No zoom yet, huh? Tell me, guys, where are the cheap seats? Do you see them? All right. Boy, I get... Where's the LSB? See, I don't have a good solid one yet. See, let me just state, this is one of the areas we can get lost in. And this is why I've been couching things in relative same-size swings. So if we practice with same-size swings, we are waiting for the market to organize itself versus forcing itself, right? And this is one of the reasons I say use same-size swings. Otherwise, we are kind of going out here and it's very subjective and we're reaching for it a little bit. And there's nothing wrong with that. But it's very good for my trading to wait for the market to organize itself in some way. Right? Waiting is the hardest part. But at least if I give a basic instruction of same-size swings, we know what we're waiting for. All right? Doesn't mean you can't hit it. All right? But we can end up doing a lot of reaching, and we have to be careful. A lot of mixing and matching. So we have to be careful not to get too lost in that jungle, or at least keep a handle on what we're after and what's controlling here. Right now, this press is controlling. It gave us a solid same-size swing, organized structure. We can forget all this nonsense and just hit it and sell it. Or are we about to grind through and pop it? We don't know yet. Okay, we don't know yet. No, there's... All right, so let's what swing are we trading, right? What are we after here? And it doesn't matter what you're after. You can be after a big swing. You can be after a big old sell if you want to be. But frame it up. This is my frame now that we've been watching. And now this is getting rather interesting here. So I'm just marking interesting things now. And I got to tell you, I'm really tempted to buy the cheap seats down here. So we'll just think about that. All right. Novin. Whoa. Is this the one you're looking at, Phil? Novin? Is that right? I think so. I think I lost Phil. Novin. Yes. Okay. You guys can, this is a very interesting pattern, right? This is a very interesting pattern. And Phil is picking out this low and this urgency, right? We can see the urgency in this guy. And you guys can follow this. And I'm going to kind of take this. I got a basic rule for myself, right? Under $5, I don't play. Doesn't mean you can't. But under $5, I kind of leave it alone. Because there's a whole different group of people playing under $5. So I kind of leave it alone. Even though a swing's a swing, I know, all that good stuff, I just kind of leave it alone. You know, your big fund managers, if I remember right, they're not even allowed to buy stocks under a certain cap, under a certain thing. And so they're not even playing in this neighborhood. There's a whole other group of people that play in this neighborhood, the kind of people that are movie stars and sell headphones and go on Twitter. And so I kind of leave this guy alone, although I love the pattern. I think I'm going to watch just usually market cap or daily volume. Yeah, I think I'll keep this on my radar just for the pattern. It's a really cool pattern and a really cool urgency. But for my trading, I'm in the $5 to $7 neighborhood most of the time. Just because it's a little bit cleaner. Weird things can happen in some of these little stocks that can really surprise you. You know, very weird things can happen in these guys. I don't know what happened here, But I got to tell you, somebody got clobbered, and somebody kept getting clobbered, and somebody kept getting clobbered. And these guys got down to, these guys are fascinating to watch. These guys got sick down to 60 cents. And this reminds me of a story of one of my in-laws. I think we charted the stock. He was part of a startup company during the internet boom in the 90s. And they weren't public, and, they basically wanted him to work for free, and he didn't. They gave him a bunch of options. And then somewhere along the line, they went public and did one of these. And so this was during the 90s. So there's this story. We did this years ago. I talked about this, and we tracked the stock. So I'm just going to give you the story. And so he got stock options as his pay. And, he's in like here, under $12. And the stock went public, and it's now, he's actually in like here, I think. I'm trying to relate this. Really cheap stock options. And then it went public, and the stock started to run, double, triple, quadruple. He's already planning his retirement. He's got plans. He's got houses to buy, boats to buy, things to live. He's planning his retirement because now all of a sudden he went from having a little bit of money to having hundreds of thousands of dollars. He's happy. And then the dot-com bubble started to go. And remember, these guys who are inside, they have a window. They can't just always sell automatically, right? It's all written up a little bit different. They have a window. They have to hit this window every 3 months or 6 months or whatever. And they have to let everybody know they're selling their inside shares. And so he followed it on down, and he followed it on down, and he followed it on down, and he followed it on down. And he was actually still in the money somewhere. And he asked me finally what he should do. He was actually still in the money somewhere. Is it gene therapy stock? Oh, guys. Whew. So he was still in the money somewhere. And he asked me, he wanted me to look at the chart and chart it and do magic. And I said, shut up and sell it. Take what money you got, And he wrote it for years and years and years. Like this. And then finally, he couldn't take it anymore. And he just gave me his thing to hit the sell button. So, I ended up, getting him out somewhere like this. And price went down to almost nothing. So he ended up with, I don't know, 30,000 instead of, 800,000. But this is a story about how we think and go with stocks. So he still ended up with some money. Not bad. But we do this. We lose all sense of reality when it comes to stocks. So let's go ahead and wrap it up there. You guys take a look at the CAD. I'll do the CAD on Friday. It's that same kind of push. And LK had a nice bottom bounce. I'll put that on the list. So thanks for your participation. And I gave you some way to practice the 3 types of trades relative to same size swings. Lots of learning you can have in there. Okay? Lots of learning. And it applied to today's CAD market. It applied to today's oil market. And we'll see you guys on Friday. Take care.